time now for the morning trade, and we check out Palantir. These shares have soared. They're up more than 450% in 1 year. And we take a closer look at this company. Reports on Monday and has been right around highs. So let's hear the latest. Marley Kayden, host of Market on Close here on Schwab Network, is with us.
Good morning, Nicole. Yeah, they have been right around highs. Yesterday hit another all-time high. Very, very big expectations here coming into earnings for Palantir. They're expecting EPS of 14 cents, which would be a 55% year-over-year increase. Revenue expected to come in at $938.33 million. That would be up 39% year-over-year. Also expecting big growth in government business and commercial business. Both of those expected to increase by 38%. Their revenue growth has accelerated for the past 7 quarters in a row. Operating margin has also grown along with that, going from a loss 2 years ago to nearly 20% on a GAAP basis. So they've had incredible performance. They have been the top performer in the S&P 500 this year. Shares hit an all-time high yesterday, up so far in 2025, up about 100%. But that does mean that Palantir is more expensive than ever before. It trades at a price to sales ratio of 126. That is a valuation that is so far ahead of anything else on the S&P 500. The next closest one is 31 for some perspective there. So Palantir stock could fall by 75% and it would still be the most expensive stock on the S&P 500 on a price to sales basis. So with all that said, its valuation's pretty stretched. It is priced with no room for error in this report, Nicole. There is no room for any misses or anything disappointing because that price is so high and because it has performed so well both year to date and since the beginning of 2024. But, there are great tailwinds associated with Palantir, all their government business, and of course the AI race, which they are a leader in. So, things are set up well for them. It's just the question of can they deliver?
So it's interesting here because I saw another deal coming with the U.S. Army. You've been talking about some of these enterprise agreements that they've received. I mean, that really gives them a lot of validity. And while some folks question, the different parts of Palantir. I mean, I know they have the deals with the government, but there's also been questions about what else Palantir does, and it's managed to be up 500% sometimes in 1 year. So there's still a lot of love for this name, but still some questions.
There is a lot of love for this name. Their government business is most in focus because those deals are so huge. But most of the analyst notes that I read, they want to know what's happening on that commercial side of the business because there is such growth potential there. So I think a lot of the questions on the call are going to be tied to the growth in that commercial side. And like you mentioned, they did just sign that new $10 billion deal with the Army. So that's another tailwind for them. They have a deal with a nuclear company. They have a deal with the U.S. Navy. So a lot on the governmental side. But interesting as you look at the analyst expectation on this company, knowing how well they've performed, they're only 32% buy rated. And then holds are 50%. And then they have 16% sell ratings. Now, Citi and Wedbush are two of the strongest proponents for Palantir, saying that both of them expect at least a 2 to 3 point beat on revenue with upside for both government and commercial revenue consensus estimates. So closely watching those figures, particularly that commercial business.
Look, I saw Loop at 178 for the target. It's at 153. Looking forward to those earnings next week. Any final quick thought?
This will be an interesting one because we've seen, Nicole, that no matter how well the top and bottom line beats are, so much of it is tied to guidance or maybe the answer to one question or one number that seemed less important is enough for a punishing response in terms of the street. So unless this comes out with perfection on every front, I would say they have a lot more downside risk.
Okay. Well, so far up about 480% in 1 year. Thank you so much, Marley Kayden. Great to see you. We continue to take a look at this name, and we join Mike Shorr, Director, Trader Education and Short-Term Options Instructor at Prosper Trading Academy. And in fact, you have a example trade for us. The stock is down a bit today. The record highs were 160 and change. Some of your thoughts on an example trade?
Yeah, so, looking at Palantir, and strictly I am a technical trader and an options trader. So, what I still have no reason to be bearish, even all the valuations and everything with Palantir. I don't want to buy all-time highs though again. So for earnings, I'm going to play this with an iron condor. And I had to put together my trade this morning before it came off a little bit, so I'd roll those strikes down. But where the implied volatility is saying that if we look at a 50% confidence interval move, that I like selling that iron condor with a slight bullish bias. I'm until I'm proven wrong, I'm going to stay at least cautiously bullish.
Oh, well, that's okay. Tell us why. I mean, how will that be driven here? Cautiously bullish on this one. I see some details.
One, we're pulling back to the 20-day moving average, and we haven't seen really a pullback in that for at least a month. And I'm just playing the higher implied volatility that's priced into this earnings report on Monday, and or Monday after the close. But playing that. You can sell an iron condor that is approximately it's in between the 50% confidence move and a full standard deviation, and you can get 1-to-1 reward to risk, meaning that you can lose as much as you make with a little bit of a bullish bias to it. I know it's a bit of a stretch, especially on a day like today, but as we've learned in this market, there's an overreaction to the downside, and then it's scoop, scoop, scoop. So I'm going to stick with that.
Do you think today is an overreaction to the downside when we see the Dow down 700-800 points? It's already coming back now. The lowest point I saw with my eyes was down about 780 points. Right now it's down 623 points. So we are coming up off our lowest point of the day. Are these kinds of overreaction days or not necessarily?
It seems a little bit overdone for me, especially since that, today's number with the unemployment, that actually, that gives us more bullets to have a September cut, which flipped this week, right? It was basically a 60-40 that they were going to cut. Then it went to a 40-60 that they're not. Most likely, if things stay this way, and we have a lot more data to come in between now and then, but if we get softer data, especially in things like, we don't want to see inflation ticking up. We did see the PCE tick up a little bit yesterday, but the weakening job market and all those revisions, that gives you an opening for that rate cut. So I still like it.
Do you have a certain sector that you really like or go to generally?
I really do stick to the tech sector. I know that's a wide berth. I do like to trade very liquid things, so I'm not a stock picker. I am an options trader, so I want liquidity. So I love trading triple Q. I love trading SPY, your magnificent sevens and things like that. For swing trades, I still like cybersecurity. And I like anything that has to do with cloud.
All right. Plenty of liquidity in that group that you were talking about, by the way. Mike Shorr, Director of Trader Education, short-term options instructor, Prosper Trading Academy. Mike, thank you, always.